I'm back with another one. This one's about volume profiles and value area high, which is this yellow here, point of control, and then we've got the value area low. And this, what I've got on at the minute, is session volume profiles. So what session volume profiles are, each session, see how we've got a split in a session there. So this is the new volume profile, which is today, Saturday. Yesterday's volume profile, which is Friday, which is here. And it's, like I say, it's a session volume profile. And how we're going to use these session volume profiles are where we're going to see the point of control is where most volume was traded. And what we're going to use is we're going to use previous day volume profile, where we've got the point of control here. We've got all this volume inside the point of control. We've got a lot of choppy action here yesterday inside the point of control. And then what we're going to do today is we're going to be watching previous day's point of control, which is here. So this is Dogecoin, or Dogecoin, however you want to say it. And as Dogecoin, you've seen here at 11:30 last night UK time, Dogecoin came into here, which is yesterday's point of control. The session changed. You got a big bullish momentum candle, which is here. And then what, because I'm not trading at this time, which is 12 o'clock last night, AM. So we've got it here. We're going to be waiting to see what happens. Get some more price action. It goes up towards the value area high. It then retraces from the value area high back to the point of control. See, a lot of people here would have probably taken a long, because you've seen a big bullish momentum candle. And you'd be like, yeah, it's definitely going long. Whereas I wouldn't have taken a long there. I'd have waited. I'd have waited for it to continue. Wait for the price action. Once that bullish big momentum candle came in, the next candle that came in, so if you've taken a long here, yeah, it started to push up. So in your mind, you thought, yeah, I'm in the right side of the market. This is going to be a winner. So as it's come up, it's then retraced. We've then got a doji candle. And then the next candle is a bearish candle. The following candle is another bearish candle. So if you've gone long here, put your stop below there. You're stopped out. Unless you've gone for a, let's have a look. So say you've taken a long here. You've put your stop there. Why would you even take that trade? Your risk to reward is pointless. It's a pointless trade. So what I'd be doing is I'd be watching price action. I'd be waiting for price to come back to yesterday's point of control, which it did. It retraced to yesterday's point of control, came down, and you had a rejection, which is a long wick candle, a rejection. So I'd have then taken a long trade. Normally my long trades I'd probably taking a 1 to 2, maybe a 1 to 3. So after it rejected, I'm taking a long. I'm putting my stop below that wick. and I'm going for a 1 to 2 potentially. I've won that trade within 15, half an hour, whoa, from 10:30 when I've taken the long. I've won the trade at 2 o'clock. So I've been in the trade a few hours, but I've won the trade. I could have even potentially gone a bit longer, and normally what I do is I see this, I see a rejection candle, I take my long, and I'll aim back for the point of control, which is there, which gives me a 1 to 3. And I've won that trade. There is times where I've taken trades and I'll go for the value area high, which is there, which is a 1 to 4. But to be on the safe side, I'll take the 1 to 3 from this area, which is previous day's point of control, which is also a point of interest, which I've got marked out on my chart here. And for point of interest, I use an indicator called DIY. This is what I use. That's the indicator for my point of interest. DIY Custom Strategy Builder. And then market sessions and volume profile right there. So, like I said, most of the time, if I'm taking a trade here, I will wait for that rejection candle, which was a big rejection candle. A lot of people might have taken a long trade there on that rejection candle, but I'm not taking that trade. I'm waiting for it to come back to previous day's point of control. And the only reason I'm waiting for that to come back to that area is because look at the volume around the point of control. There's a lot of volume here, and previously, like yesterday, it came back here, and you've got a lot of volume. You know, you've got the same here, same sort of setup, but because not yesterday but the day before yesterday, which was the 7th of March, the point of control is here on the 7th of March. I'm not taking that trade, and I won't be taking that trade because it's not really come back to my point of control, which is my point of interest, which is just here. It did come all the way down yesterday, and I think that's when Bitcoin got really volatile. Around 3:30 yesterday, Bitcoin got really volatile, which we all know Bitcoin, Ethereum move the market. So I'm not taking that trade. That's not an A+ trade for me. But here, where we've got point of control, is an A+ trade. So I'm taking that trade, and I'm just aiming for the day, the actual day that I'm trading. I'm aiming for the point of control, which is here. And I've hit that trade. I'm in and out. If you're scalping, be in and out on the shorter time frames. So use the 15-minute for stuff like this. Personally, that's what I use, the 15-minute. So let's see if we can find another example. Right. Here's another example. So we've got the point of control on Dogecoin. Dogecoin is here. It's gone into the next session inside the point of control. Rejected, pumped, rejected, pumped back to the point of control, rejected, back to the point of control, value area low, came back up to previous day's point of control, which is there. And if we look, we're at the value area high. So if we take a quick short scalp here, see, normally I'd put my stop at that wick and aim for there. Not a good trade. Wouldn't be taking the trade due to the simple fact that the risk to reward 0.79. Why would you want that? Why would you want to risk more to gain less? Makes no sense. So I won't be taking that trade again. But it's another example of where price will always come back to the point of control. It is attracted to the point of control. Every time, price will be attracted to the point of control. And then, have we got any more examples? Dogecoin again. You're not, the problem is with trading, you're not going to get the perfect setup. You can try and find the perfect setup, but you're not always going to get the perfect setup. So this is why I like to use a point of control, value area high, value area low, and looking how price action is around them areas. If price action tells me that, yeah, this could potentially be a good trade, I'll take the trade. If not, I'm not taking the trade. But here was a good trade. A lot of volume into here, long. Let's see any other coins. Let's see what we've got here. Right. Matic. Not really. Litecoin. Litecoin, not a bad one. So here's previous day's point of control. Lots of volume. Price trades down through the point of previous day's point of control. Back up. Rejection. Doji. Back to the point of control. Bullish momentum candle. Take a long. What you're hitting there. Should take it along there. Stop below there. Aiming there. 1 or 2. And that's took 15 minutes. You're in and out of that trade. In, out. See you later. Any others? Bitcoin Cash. Point of controls there. Volume. Rejection. And a 1 or 2. So a look. Point of control. Rejection. Stop there. So 1 to 4, 5. See, some people will take that. I'm not taking that trade. And you've just got to keep looking through the coins to see what are high probability trades. If it's not a high probability trade, why take it? It's pointless taking that trade. So we've got WooCoin here. Point of control, volume. Traded down when it was volatile yesterday. It's come back up to it today at 8 o'clock in the morning. Big rejection. Take your short. Short. There. Stop there. A 1.72 risk to reward, which is still not it's all right. A lot of people will take them, but I'm not. I don't really want to take them either. If I'm being honest, I want 1 to 2s, 1 to 3s, potentially. I don't want 1.76. Avecoin. Oh, on there. Rejection. Big bullish momentum coming out of there. But that's today's point of control. I want to see it line up with yesterday's point of control. So have a look. Got any on here? Okay, where's this one I taken? I took a trade today. Or it's CFX, I think it's CFX. Trade I took today on CFX. Okay. Yesterday's point of control. Volume. Waiting. There. Doji. Bullish momentum. In the trade. Stop below there. Aiming for value area high, which I did. I aimed for value area high. If you're aiming for point of control, 1.83. I aimed for value area high. Won that trade. 3.35 risk to reward. Lovely trade. And that's how you need to look at it with the volume profiles. That's how I look at it. You want to also look at the price action. You got possibly a double bottom. What did we have here on CFX? A double bottom. You're looking at candle patterns. If you like to use trend lines, use trend lines. Does it break above the trend line? So if you're one of them that likes to use trend lines, got a coin trending down like this. You got a double bottom here. Broke above the double bottom. Take the long. You've won the trade. You're in and out. That's what scalping is. In, out, in, out. And I'd advise you probably to only take between 3 and 5 trades, scalping. Also another rule that I like to use, if I take 2 trades and I lose both trades, I don't want to trade anymore that day, because then I'm at a bigger risk of losing more money. If I take 2 trades, win 2 trades, take another trade, lose that trade, potentially I will stop trading for that day then, because I'm already up with my 2 trades. So why would I want to risk losing the next trade and then being back at break even? So they're your risk to rewards. Try and figure your own risk to rewards out. You've also got another one here. Anchored volume profile. So anchored volume profile. Say you want it from this point of interest here. Click. There's your volume profile. Value area high. Value area low. Point of control. Excuse me. That's another one to look at. Somebody just put something. Let me have a little look at this. I'm not taking that trade. Don't get me wrong. Potential short incoming. But if we get anchored, go there. So we're at the value area high. Point of control moved up. Point of control's here. On your session. On your anchored. Point of control has now moved to this area. Lots of volume. Let's see where this trade goes. Previous point of control were here. Let's see if it reaches previous point of control, which there's a lot of volume here. Let's watch this trade. Go down to the 5 minute. Getting rejected. Value area lows here now. On the anchored. Point of controls here. You see how the point of control moves with price on the anchored. That's why I like to use the session volume profile. It's a lot better because you know where the point of control is. So you had another good area here on the point of control. Yesterday's point of control here. Choppy. Bullish momentum at 9 AM. Take you long. Aim for here. Value area high. In and out. I want to see how this trade plays out. Because on the anchor, the point of control moved. But you've had a slight rejection here. Let's see how it plays out. Look how it's coming back up. Look. See, I'm not taking that trade, me. Personally, I'm not. But, like I say, everybody trades different. You know? If it works for you, it works for you. But I didn't want to take that trade. But anyway, say somebody did take a quick scalp there. Oh, we got a short. So you got a short there. But you stop just above it. And what was it? Personally, not my thing. But if anybody did take that trade, they are in profit now and you're in and out. Quick scalp, bam, bam. But yeah, that's all I'm saying now is, you know, if you want to find higher probability trades, use the volume profile, the session one. It's a good way to take the trades. We've even got a fine example. Thursday, point of control. Come back, bullish momentum, off, bam. Value area high, came all the way back down at 3:30. Big long wick. Take the long. So you're gonna be opening it there. Your stop's gonna be here though, which is a big stop. And look at the trade that you got there. It's only a 4.7, but look at the size of the stop. Say you put $500 on that trade. What's your stop going to be? $150? And you're going to have to hold that trade for a full day. So if you're wanting a scalp, look at your high probability trades, which would have been here. Pushing off. Point of control. You had support and resistance areas right here. Pushed off out of it. Came back to the support area, which I like to use as a box, which is the point of control there. Come back in. Bullish momentum out of it. Long. Winner. And that's how I like to look at trades. But that's it for this one. Hope you've learnt something from this. And don't forget to sub, like the video, and leave a comment. Let me know what you want from my next videos, so I can try and get some together. And I'll catch you in the next one.